The US and Europe in general have been going through their tightening cycle at the moment to try and stem inflation. I mean, core PCE is their core metric by and large across all those major markets. So the question's been, is their recent tightening cycle taking effect? Is inflation coming down? How much more have they got to do? In the recent Sintra meeting hosted by the ECB, you had all the major central bank governors giving their take. They're all indicating further tightening. It's going to be very data dependent. Now, the question is who's winning? Who's bringing down inflation the most? It seems that the Fed in the US are a lot further ahead than Europe and certainly the UK. The UK inflation picture is not quite coming down as quickly as they would like. Their recent 50 basis point hike in the UK indicates that they've realised there's more to do. It's a bit of an open admission of tightening is going to be more aggressive to bring down their inflation metrics. So it's going to take some time. It's not going to stop anytime soon. And as looking forward, the US have indicated that they're happy to pause. They may hike again in the future, but they've sort of penned their colours to the mast in terms of really being data dependent. Any single shock in payrolls or jobless claims, ISM, or of course CPI data might cause them to change tack pretty quickly and reissue their tightening cycle more aggressively. So I guess the two major markets we've been looking at recently in terms of big reform is Nigeria and Kenya. In Nigeria, with the election of the new government, they've made some big policy changes that they put in their manifesto, but it's come to the fore sooner rather than we thought. So fuel subsidy removal has caused pump prices to effectively triple. There's still a question mark over whether we think or where that money is going to be repurposed within the economy. It could go into security, it could go into welfare, etc. So there'll need to be some agreement in government between the current leading party and the Labour Party in order to hammer out a budget that they're happy with. But from what we've seen on the ground, everyone seems very accepting of this fuel subsidy removal and the hike in pump prices. But it's yet to see what will happen next. Otherwise, in terms of FX, we've seen major currency reform. Effectively, the CBN, the Central Bank of Nigeria, has collapsed all the currency windows into one. They've let the official rates sort of run freely without any intervention for the purposes of fixing a price by the CBN. This has allowed the official rate and the parallel rate to narrow quite aggressively. But there will be some more work to do. We've seen that turnover in the INE window, which is the official platform for exchanging currencies, turnover has gone down hugely. So we're only seeing sort of $60 million equivalent a day. Previous it was about 300 million. So we're expecting the CBN potentially to have to intervene again to give more dollars into the window. Otherwise, we'll see more demand coming across to the parallel rate. In Kenya, the new CB governor, Thuge, he's hiked 100 basis points on the interest rate. It was a bit of a surprise. It's kind of a stamp of authority from his standpoint in terms of how to quell a bit of inflation, how to control the ever-depreciating Kenyan shilling. And we also saw a new budget from the government, which was probably more fiscally aggressive than many expected. Again, it's an effort to stem long-term inflation, but the short-term impacts could be a higher inflation level. So more work will probably need to be done to stop the currency depreciating further, although we have seen some stability over the past couple of weeks. I think Nigeria specifically, seeing the fallout of this FX reform is going to be quite interesting. If the government and CBN do decide to let it run as freely as possible, the currency, we feel like they're going to be forced into having to impose a proper monetary policy regime. Now, this would involve a substantial hike of interest rates such that we can get a real positive interest rate environment, because at the moment with rates at 400 basis points below inflation, it's non-sustainable for a freely floating currency. So we're going to have to watch for the CBN to start considering hiking rates. It's not something which they've needed to do in the past because of the currency peg, but now we're in this new regime, we're going to be monitoring that extremely closely. When it comes to the budget revisal, again, agreements in government, agreements with the Labour Party are going to be critical to decide where this new money is going to be repurposed. It'll give a good indication of where inflation is going to go in the future in Nigeria.